Hello and welcome to AI Market News by LM. The US stock market is getting pulled in two totally different directions right now, and it has us all asking one huge question. Are those rate cuts the Federal Reserve basically promised, are they just off the table now? Let's get into it.
The market is really caught between a rock and a hard place. On one hand, we've got a new conflict overseas that's threatening to crank inflation back up. But on the other hand, the US economy is showing surprising strength, which, believe it or not, makes the Fed's job a whole lot trickier. So what's going to give?
So what's really got everyone on edge right now is the 6-week conflict heating up in the Middle East. It's centered around Iran and the super important Strait of Hormuz. And this isn't just a regional problem. Oh no. It's sending shockwaves through the global energy markets and bringing back all our worst fears about inflation.
Now, this puts OPEC Plus in a really tough spot. I mean, they've agreed to a symbolic increase in production, but let's be real, key players are facing some serious issues. They're already warning that even when the conflict ends, it's going to take a lot of time and money to fix all the damage. That tells us supply problems could be sticking around for a while.
And we can see exactly what that means right here. Both Brent and WTI crude, those are the big global benchmarks for oil, are hanging out around $109 a barrel. And that's after they almost hit 120 last month. Numbers like these definitely keep central bankers up at night. But while energy is going crazy, the story here at home in the US is completely different and honestly pretty confusing.
So while all that geopolitical tension is bubbling up, the US economy just threw a massive curveball. The latest jobs report wasn't just good, it was an absolute blockbuster. And it completely changes the game for what the Federal Reserve might do next.
Get this, the US economy added a staggering 178,000 new jobs in March. From where the Fed is sitting, that's a sign of a really stable labor market, which is something they've been hoping to see.
And just look at this chart for a second. The forecast? Economists were thinking maybe 59,000 new jobs. The actual number came in at 3 times that. An economy showing this kind of strength, well, it probably doesn't need the boost of a rate cut right now.
But here's where it gets complicated. So, tons of new jobs? Great. But wage growth was a little meh. It only rose 0.2%. This creates this weird good news is bad news situation. A strong job market is fantastic for workers, but when you mix that with rising energy prices, it could actually force the Fed to keep interest rates high to make sure inflation doesn't get out of control.
All of this leaves the Federal Reserve completely trapped. You've got a booming job market on one side and the looming threat of inflation on the other. So what do?
Let's just remember, the Fed really has 2 main jobs: keep people employed and keep prices stable, control inflation. Right now, the employment part is looking fantastic. But the price stability part? Well, with those oil prices climbing, that's under some serious threat.
And the market has definitely taken notice. Looking at the CME FedWatch tool, the odds of a rate cut at the next meeting on April 29th are 0. Gone. Just a month ago, a cut was still a real possibility. Now, there's even a tiny but very real chance of a hike being priced in. This has completely flipped the script on Wall Street. The whole conversation has changed. We're no longer asking when the Fed will cut rates this year. The question now is if they're going to cut at all.
So how are the markets actually handling all this back and forth? Well, in one word, volatility. Fear is creeping back into the picture, and we're seeing money rush into the US dollar as a safe place to hide.
And you can literally see that uncertainty right here in the S&P 500. The market's on a roller coaster. Sharp drops, then nervous little recoveries, as investors just try to figure out what all this conflicting news actually means. The CNN Fear and Greed Index backs this up. We're seeing a clear move towards fear. In fact, a really interesting pattern is showing up. Investors are selling stuff and taking risk off the table before the weekend hits, because nobody wants to be holding risky assets when a major geopolitical headline could drop at any moment.
This little snapshot pretty much tells the entire story. We've got volatility in US stocks. The S&P and NASDAQ are bouncing all over the place. And with all that uncertainty, money is flying to safety, which means a stronger US dollar against other big currencies, like the Japanese yen and the euro.
So where do we go from here? The market is desperately looking for the next big clue, and everybody's eyes are glued to the economic calendar for next week. Okay, pulling up the calendar from investing.com, we've got 2 huge events coming up. On Wednesday, we'll get the minutes from the last Fed meeting, which should give us a little peek inside their heads. But the main event, the one everyone is waiting for, is on Friday, the CPI inflation report for March. This number is going to be absolutely crucial for what the Fed does next.
and the expectations are kind of jaw-dropping. Because of that surge in gas prices, economists are predicting a 1% monthly jump in CPI. As we've heard in various news commentary, that's a huge number. We really haven't seen a monthly jump like that since the big inflation spike back in 2022.
And that brings us to the final, really uncomfortable question. We've got a strong economy, we have inflation making a comeback because of a war, and a market that's given up on rate cuts. Could we all be so wrong about where things are heading that the Fed's next move isn't a cut, but another hike? That's the billion-dollar question we're all grappling with right now. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.